Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro, Sasfin Securities, Zwelakhe Mnguni from Benguela Global Fund Managers. Be sure to send your stock-related questions via email stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV, #Stockwatch. Gents, appreciate the time. Zwelakhe, let's start with you. Let's start actually gazing back at the year. If we look local, I mean, our market's up 30-odd%, but it really has been precious metals. If you went in gold, you don't know about it. A little bit in the banks, but SA Inc. Really having a tough year. It's been a year of very much different parts.
Indeed, Simon, but I think, or I'm hoping that we'll see a turn in fortune post this grey listing being removed. I'm also hopeful that we'll see, now that we've hosted the G20, there may be some activity on the investment side that may support some of the companies on the JSE. But I am positive about the SA Inc. Stocks going forward. The rand has strengthened, and I think it gives them a bit of a boost, and it'll tame inflation to some extent.
Yeah, and it's also, I mean, some of the SA Incs under pressure this year, Mr. Price, had a spectacular 24. I mean, they were doubled in price last year. David, I mean, if you went in gold, you're probably not half as happy as those who were.
Well, yeah, I took the top 50 shares by capitalization, and the JSE's up, I don't know, I wrote it down somewhere, it's up, call it 32%.
Yeah.
And of that, of the 50 that I was looking at, those are the top, only 13 were above 30%, which are all those gold shares you're talking about. Everything else was down, you know, everything was, and as you say, the banks, the retailers kind of battled. Look, they did okay, other than your Mr. Price and I think Fashini's and a few other retailers. You know, Simon, there's something that's quite interesting in that. Even, let's ignore gold. And because I've been looking at the miners now, I'm saying, oh, so much is happening. But, you know, if you brought the big miners, BHP, Anglos, well, yeah, even Anglos, South 32, you're no better off than you were 3, 4, 5 years ago. You know, you haven't done better, you know, and we're talking higher copper prices, we're talking higher, you know, higher commodity prices. So it's been a battle, and even the platinum stocks are not above where they were 3, 4, maybe 5, you know, 3, 4 years ago. It's been a real battle. So it's only gold in which you can actually be proud of. Just the last point though, the one area that I didn't think would make it and has done incredibly well have been property shares.
Well, yeah.
You know, Growth Point, Vukile have done incredibly well. But anyway.
And those property stocks in the back of a really, really good 2024. I mean, they're up some 30+% last year. David, if we look offshore, there's almost a similar disconnect where it's been, well, AI and big tech.
That's it. Full stop. And if you haven't been there, you've battled along. There might be a few exceptions along the way. You might have found some few pharmaceutical companies. Eli Lilly has done well. I think I was looking at J&J, AstraZeneca, but you can't say pharmaceuticals as a group because it's been very specific, but it hasn't been easy. If you haven't been in AI and concentrated in AI, yeah, your portfolios will look okay, but nothing brilliant.
Yeah, Johnson & Johnson up 34% in a year. It's a stock I hold, and I'm used to 8% a year. I got 4 years in one. Zwelakhe, is there the disconnect? You said local that there's certainly some, shall we say, cautious optimism around SA Inc. If we look at the US, sort of the non-big tech, is there a reason to be cautiously optimistic there, or is more caution perhaps justified in the non-big tech in the US?
I think if one looks at the fundamentals, I mean, from the tech sector is quite extended in terms of valuation, but they've got very strong earnings, very strong performance coming through. I don't know for how long, given that they are now starting to do all the clever tricks around secular financing. On the other side, I think what is better is that you do, as David says, I mean, the likes of Walmart, some companies, the defense companies have benefited a lot from the tension in Europe. There has been quite a number of areas that have been showing good improvements, but certainly I would be more optimistic about non-tech elements of the US than the tech elements.
Yeah, but there are some valuations there. I take your point. And I mean, some that were cheap, Alphabet, well, that suddenly went crazy. Let's go to some local. We had Alexander Forbes results out earlier today. Zwelakhe, your thoughts on the numbers, your thoughts on the investability of Alex Forbes?
Yeah, I mean, I haven't seen the results, but I think the turnaround strategy that we saw, I think it was the first half, was actually quite promising. I mean, the retail strategy seems to have been taking hold, and the improvement of capital structure has also been beneficial. So I still think that it's a good investment if you're thinking about markets moving higher from these levels. I think it would be a good place to be.
David, they are in some ways a proxy on market movement because, as you always point out to us, they're not getting, I mean, there's no GDP growth, so they just have to keep on stealing from each other in a sense and wait for markets to improve.
Yeah, but this is from a low base. But I think that, you know, when markets go up, we all look very smart and, you know, we all look like we've done well. But I mean, it's where you've got a market here, the JSE, which is up 30%. I think it's going to flatter a lot of those results. You've got to look at, I always look at new business, and I haven't gone through Alexander Forbes in great detail, but I mean, one's got to look, you know, it's all very well to work on the bottom line, you know, what's below sales and that. But I like to look at whether they're selling, you know, whether they're improving their services, getting more services and so on. But yeah, you know, haven't got any real far-reaching comments on this one.
Okay, so
I saw they were up about 25% or something, their earnings. That's good.
Yeah, no, nice numbers. I mean, can't argue with the numbers. So then let's turn to one that is, well, I don't know, Aspen, having a tough time of it. And the question is, should we start doing some nibbling on Aspen? I mean, it's down at 92 and change. I hadn't noticed. It's just kept on falling since that April announcement. David, can I interest you in some Aspen?
Yeah, you know, we still don't know what the full problems are at the business. I mean, this kind of price is really low, and it's a multi-year low. But it just shows you that the market is still not convinced that things are improving. You know, Simon, watch for the smart money. You know, those people in the know, and I don't mean this is insider. Those who can kind of read the tea leaves or are able to work out whether things are improving there. And, you know, it could be customers, it could be any kind of business relationship where people start to feel better about the business. But I don't think it's come through yet. You know, I think watch it. It's in cheap territory, but maybe it's a bit too early to start, you know, taking any big risks on it.
So, Zwelakhe, for you, Aspen, I mean, is this a case of they need to get some business into their sterile facilities?
Yeah, I think Sam, the big thing is their strategy. I think they've been blowing hot and cold on strategy. So at one stage they were generics, and then they moved back into ethicals, and now they've expanded this business into multiple geographies. They built a massive capacity here, and it doesn't look like they are getting aligned with the potential customers or the clients to utilize the capacity in the factory. So I'll be on the sidelines for a while. I mean, I'll wait and see what is happening. I think the debt situation would need to be resolved too. So it's an ongoing problem. You think that they're taking off, and then something comes up.
Yeah, that's actually.
I mean, you know what? If you look at their chart, and I'm saying this is what I'm trying to say, you know, it's maybe early. That's just kind of winding its way down. There's no signs of a turnaround. That's a worrying sign. You know what I mean? From a technical point of view, you want to see it even stabilizing at these levels. and forming some kind of base, but that's not happening. So we don't know what the news is out there that keeps driving it lower.
Yeah, absolutely. I was surprised to see it down in the 90s. Last time I checked, it was, I don't know, certainly sub 100. A question around Standard Bank. The trading update this morning for 10 months looked decent. I'm holding it. Is this still a stock worth holding? David, our banks have been cheap. They've had an all right year.
Yeah.
They're not expensive, though.
No. And I think it's another very steady number. You know, if you go through it's a 10-month. I don't know why they're publishing 10 months. Maybe
ICBC.
it's just before. Oh, I see. Okay. But it's what you'd expect. I don't think there's anything exceptional happening. Simon, what you've got to look for in those big banks, and we've seen it now, are all the newcomers.
Yeah.
Whether it's Pep Stores, whether it's Old Mutual, whoever's coming to the party, and they're all biting, you know, at their backsides and having a go at all these legacy banks, you know, and everyone's changing strategy. Optasia is now, you know, first round, we got to take a stake in Optasia, you know. Even Investec, who were very snooty whether you could actually open an account there, are now taking anybody, you know, we're open for business. So, you know, so there's a lot of competition out there. And when you operate on a cell phone, you don't have to go into those marble halls to open an account or draw money. It's pretty easy to change your bank.
Yeah,
so
maybe
this
we
is a
should
competitive area.
We should start a Stockwatch bank. I mean, everyone else is. I mean, let's get in on the
Yeah,
fun.
no.
Zwelakhe.
Yeah, look, I like Standard Bank. I think they've maximized their opportunity on the African continent, not only just in South Africa. I think they face competition, as David says, here in South Africa, but I think they're balancing that with the rest of the continent, providing them with some growth opportunities. And I think they've executed very well in Africa. I'm a little worried about the former head of corporate bank that's gone to Absa and running Absa now. I think some of the deals could disappear in that battle, but I think they are a very well-established African bank.
And do those, Zwelakhe, I mean, on the way up with the rates, they were benefiting from it. Is there going to be some pressure as rates come down? I mean, not in any massive sense, but it does put a bit of pressure on their profitability.
I think, yes, there will be some pressure, but I think what one has to look at is that are they participating in some deals in the corporate investment banking? I think times like this, that's where the corporate investment banking kicks in and provides them with a cushion, and you hope that with rates falling, the impairment would improve, and that would drive the performance. I would still, even at this point in time, I would still support a Standard Bank position.
Yeah, I get your point on that, both the corporate, but also just less in terms of bad debt. David, Wayne always liked the I think, what was it, the chips that he liked, with the onion rings, but Spur versus famous brands. I'm looking for some QSR sit-down dining. Which would the panel prefer? David, Spur or famous brands?
It's much of a muchness. They're both well-established names. I'm not going to be able to distinguish which one's going to do better. You know, famous brands has got a much wider range, but that doesn't mean Spur hasn't. They're all giving you pizzas, they're all giving you steak rolls, burgers, you name it. I think one's got to look at the broader economy. Are people able to spend at that level? It's if you go to the malls, I think this is one area where people are spending on food. They might not be going and buying any other thing, but and I've always had to, I've always marveled at how well these businesses do and how they manage to maintain costs. But costs of pressure, the cost of food, cost of electricity, cost of rental, all of those kind of chip away at their margin. So they can't raise prices accordingly. But still, they're pretty good businesses without really, knocking the lights out. Yeah, they're okay. It's not my favorite choice.
Yeah,
but
not exciting you much. Zwelakhe, do you get excited for a Spur or a famous brand?
I'd probably go for Spur, even though it's illiquid. I'd probably go for Spur. I think it's got an added advantage of having a kids pool, and I think that enables it to weather through the storm, even if times get tough. Because parents tend to want to entertain their kids, and I think that's something that is beneficial to them.
Yeah,
Simon, I must say, I'm a big soccer fan. I watch all the football games. And what happens there is it's either sports betting, booze, or Spur. And Spur are advertising big time. And as Zwelakhe says, it's all about the kids and, showing how kids grow up, at Spur. But there's credit to, merit in what they're advertising.
No, that's a fair point. And it's why I haven't been to Spur in so many years. I don't have kids, so there's no driver for that.
Oh, yeah.
Zwelakhe, a question coming through around Afrimat. I got in when it started to run in September, but it's now all the way back down below 40. Do I hold? Is there value here? I mean, Zwelakhe, Afrimat, I mean, the challenge has been Lafarge. There's been some anthracite issues as well. Would you be hanging on to Afrimat? Would you be buying at these levels?
I'll probably hang on to it on a long-term basis, but I do think that the Lafarge acquisition was a big risk. I mean, their ability has been proven in other acquisitions, but I think this might be a bit challenging in terms of turning this thing around. So I'd hold on for the long term and hope that management can execute well. The anthracite and the other businesses, I mean, I'm not so much worried about them in the short term. I think the production wobbles and those things can be sorted out. But I think the Lafarge deal is the one that keeps me awake at night.
Yeah, that's the big deal. David, for you?
You saw it in the PPC numbers, awakening the giant. There was a lot of restructuring and good stuff happening there, and a lot of demand that came out of Zim. But top line not happening. Yeah. So, where you buying Lafarge, which is a major cement producer, you've got to wait for the top line, and that's government spending or businesses spending on infrastructure in big ways, building roads, building bridges, and so on. So, and even on the housing side, I think it's a bit early. And that chart again don't look so good. Every time it starts to, as you say, it takes off and down it goes again.
Yeah. Question coming through, David, around meta platforms, which is what? Facebook, Instagram, and the like. It's the laggard stock of the Mag 7, up only around 8% for the year. Is there opportunity here? Would you be looking at Meta?
Yeah, I would. Zuckerberg's not scared to spend, and he spends in mega billions. And you've got to have faith in believing that this is going to continue to change our lives, and with those kind of brands that he owns, that's where the advertising and that's where the opportunities lie. I'm quite happy with all of those. With the Microsofts, Amazons, Alphabets, Metas. I still think you can hold on to those. Even Apple's starting to look good.
Yeah.
So the whole area is not over yet, and they'll still continue to grow double digit.
So, Zwelakhe, for you, I mean, they do own 3 of the largest platforms in the world with billion-plus users, which is staggering numbers. Would Meta be attractive to you at current prices?
It would be. I think it's. I agree with David that Mark Zuckerberg is spending money. Sometimes it's quite aggressive without a proper strategy. I mean, that Reality Labs, I think, spent $70 billion. But I think that if he refocuses on what matters now, he may be able to get meaningful value out of AI transition.
Excuse me, question came through.
Simon, you remember he used to wear hoodies,
Oh, no, now he's gone all fancy. Yeah.
Now he's gone Montclair, He's like Bright Kamala, wears very fancy stuff.
Yeah. Gold chains and the whole bunch. Another either or. Zwelakhe question, Clicks or Dis-Chem? I like the business strategies. Is one standout better than the other? Zwelakhe, Clicks or Dis-Chem?
Clicks. And again, for the safety, I know that the valuation looks more attractive on Dis-Chem, but I still feel that the execution has been phenomenal and continues to be so on Clicks. And I think there is potential for growth, and they are very efficient in how they run the business. And that'd be my choice.
David, Clicks, Dis-Chem?
Just on history, and on technicals. But I like Dis-Chem. You know, I like their shelves are constantly full. I think they're very good marketers in that. But I mean, from a financial point of view, I think Clicks has just got the edge.
Question came through. I bought the JSE, the exchange share earlier in the year. It's been doing great for me. Worried about competition commission between them and I think it's A2X. Should I worry? David, I mean, we can see it. You check volumes every day and they're going the right direction.
Yeah. In fact, they're now well over 20 billion a day and still a lot of trade taking place. So, and they're a well-run organization. You know, we can be critical about them. The listings that come on and go off have nothing to do with them. It's really the economic situation in South Africa which doesn't open the way. But we've seen more listings. Sure. You know, I'd see Cell C, Taser, you name them. We're waiting for Coca-Cola. So, but it's a good, steady. I would go for them, say, rather than an Alex Forbes. Much, you know, feel more comfortable going for something like that than you know, where I think there is growth. There is some growth. And they're well run, good business. And
a simple business model as opposed to an Alex Forbes who's selling insurance, and those sort of results always hurt my head. So, Zwelakhe, would you hang on to JSE shares at this point?
I'd actually go for Alex Forbes over JSE. I think the pricing pressure has been immense and intense, and they needed to spend a lot of money to maintain the IT systems to support or retain their customers. I think it's a well-run business, I'm no doubt about it. But I don't know if this current momentum can continue in terms of the trade volumes. But certainly, if there is any guarantee to the market, go for Alex Forbes.
Okay, so we got no consensus here. But before we get to stock picks, question coming through. Shoprite in the 270s, surely this is opportunity. So, Zwelakhe, would you look at Shoprite in the 270s?
I would. I think very well-run business with a long-term vision in terms of gaining market share. So I definitely look at it, and I think it's one of the companies that I like a lot.
David, do you like Shoprite?
I do, but I can't understand why they're not performing. Yeah. They're going like they're just kind of winding sideways, which might be in line with the whole retail complex. But I mean, it's you can't fault them for their boldness and expansion and the way they run businesses.
And they do, but they go through periods of going nowhere. But let's get to some stock picks. Both offshore. David, you're going with Walmart.
Yeah. I don't know. I'm using that as a proxy for what we saw over the weekend in Black Friday spending. I mean, incredible amounts being spent, way up on last year. A lot of it is online. Look, they're well positioned online, but I think when their results came out, I think what I liked about Walmart is that a lot of home brands, and I think with consumers becoming very picky and not really governed by historical norms or legendary products. I think they're well placed. So I like this business. I think this together with Home Depot are going to be my choices for next year. I think both of them with rates coming down are going to be very well placed.
So, Zwelakhe, for you, Amazon, you alluded to them earlier. You like the Mag 7. Amazon, your pick.
Yeah, I like it, and it's actually, to let on to David's stock, to say that it's a Walmart with a AI boom in it, you know. So there is definitely their AWS platform is fantastic and continues to grow, and I think there's a big tailwind behind it. They will have a bit of a capex in the short term, but I think long term their investment in robots is actually going to help them become more efficient in the e-commerce business. So I really think that it is going to be resilient even in a turbulent AI market.
And here's my crazy stat for the day. Walmart has beaten Amazon over the last 5 years. Who knew that was even possible? But that's all for Stockwatch today.
That's the reason why we should take it.
100%. That's all for Stockwatch. Thanks to our guests, David Shapiro, Sasfin Securities, Zwelakhe Mnguni, Benguela Global Fund Managers. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.